Hey folks, Dan Frio here in the Mortgage Update. It is September 12th, 2019. What happened today? It was a wild ride. At the end of the day, we were down a little bit. Nothing really to make any changes at the end of the day. But from the beginning of the day to the end of the day, there was a wild ride. But let me go to the main markets right now just to kind of bring up to date on what's happening there. The Dow Jones was up 45, really nothing there. Bond yields, again, let's look at the spreads between the 2 and 10 year. That's the inverted yield curve. Again, we're still okay. The 2 year is still lower than the 10 year, not by much, but it's there, so it's not inverted. So that's basically the news there. What happened today? Well, at the beginning of the day, the European Central Bank, their head person, came out and dropped interest rates. And then they did another thing that really spiked the market. They came out and announced quantitative easing. Now, we did that years back kind of to bail out the whole economy when things were kind of going haywire. I always reference it as the world ended. What that means is the government steps in and starts buying up all these bonds. So, as we know, the more you're paying for bonds, you're buying, so demand goes up, prices go up. Thus, if you're a student of the channel, that makes interest rates go down. Okay, so that's driving down the European central banks. They're driving down their yields or their rates. So thus, it was great news for our bond market and our mortgage rates. So we opened the day, here's where we opened. So we were at yesterday, as you know, we settled at the floor, the 50-day moving average right here. And then we opened the day all the way up here. It was a huge comeback. And then by the time the day closed, we were underneath the 50-day moving average. I don't expect that to stay. I expect this to stabilize and come up through here. The big news that came out that really transformed the market was around 10:20 a.m. Eastern time today. Bloomberg reported that President Trump and China reached an interim trade agreement. And that gave us a stock rally. That basically ran up the prices of bonds, driving down yields. Flip-flop that around. That was moving money out of bonds, thus taking the money out, which brings the prices down, yields up. So that's what happened. European Central Bank started the day. Let me show you the chart of the day. This is the chart of the day. This is crazy. This is a huge move in rates. We started the day right in this range. Look at the move that we saw throughout the end of the day. We went from 101.6 to 101.1, and it was a very volatile day. So this is actually an extreme move, more extreme than you can imagine. So that's that part of it. But right now, I'm cautiously float, because every day we're a tweet away from things just crashing. But we're hitting resistance right here, which is good. And I see the market stabilizing and rates coming back a little bit. There's retail sales coming out tomorrow. That shouldn't really drive anything. It's basically right now it's technicals and what the world's doing and what we are doing with China. So that's today's report. I will not be reporting tomorrow. I am actually flying out of town for the weekend. So I will see you bright and early or bright in the end of the day on Monday. So take care. God bless. Have a great weekend.